Everyone is talking about BlackRock and XRP right now, but almost nobody understands what is actually happening behind the scenes. And I'm not talking about rumors. I'm talking about a documented infrastructure play that connects BlackRock's $14 trillion empire directly to the XRP ledger through a pipeline that is already being built. By the end of this video, you're going to understand exactly how BlackRock is positioning itself around XRP, why their CEO Larry Fink just made a massive declaration at Davos about tokenization on a single blockchain, and the one development that just happened this week that could change everything for XRP holders. If you're holding XRP right now, subscribe and stay with me, because what I found in step 3 is going to completely reframe how you think about your investment. So let me take you back to January 26, 2026. Larry Fink, the CEO of BlackRock, the largest asset manager on the planet, controlling over $14 trillion in assets, stood on stage at the World Economic Forum in Davos and said something that sent shockwaves through the crypto world. He called for rapid tokenization of financial assets on a single standardized blockchain, not multiple chains, not a fragmented system, one unified ledger. Now every YouTuber and their mother covered that headline. But here is what nobody broke down. Why does that matter specifically for XRP? And what has BlackRock actually been doing behind the scenes to make this happen? Let me connect the dots for you, because this is where it gets real. First, you need to understand what tokenization actually means in plain English. Tokenization is taking real-world assets like stocks, bonds, real estate, even currencies, and turning them into digital tokens that can be traded and settled on a blockchain in seconds instead of days. BlackRock's own 2026 thematic outlook report named tokenization as one of the key forces driving markets this year. They said, and I'm paraphrasing, as tokenization continues to rise, so will the opportunity to access assets beyond cash and treasuries via the blockchain. That is BlackRock telling the world this is happening, whether you're ready or not. And right now, as I'm recording this, XRP is sitting at around $1.42. The broader crypto market has been getting absolutely crushed. Bitcoin ETFs saw $318 million in outflows last week. Ethereum ETFs lost $166 million. But here is the part that should make you pay very close attention. XRP ETFs pulled in $39 million in net inflows during that exact same period. XRP was the only major crypto asset with positive institutional inflows, while everything else bled. That is not a coincidence. That is smart money positioning. If this is opening your eyes, smash that like button, because we are just getting started. Now, here is where BlackRock's plan actually becomes visible, and this is the part nobody is talking about. BlackRock launched something called the BUIDL Fund. That stands for the USD Institutional Digital Liquidity Fund. It is one of the most credible real-world asset tokenization efforts from any global asset manager. It initially launched on Ethereum, but then BlackRock enabled multi-chain functionality through a protocol called Wormhole. Now here is the connection. Ripple officially integrated that same Wormhole protocol into the XRP ledger. So now you have BlackRock's tokenized assets sitting on an interoperability layer that connects directly to the XRP ledger. The infrastructure is already built. This is not speculation. This is documented on-chain connectivity between the world's largest asset manager and the XRP ecosystem. But it goes even deeper than that. BlackRock's tokenization stack is powered by a company called Securitize. Securitize handles the regulated issuance, custody, and lifecycle administration for tokenized securities, including that BUIDL fund. And guess who backs Securitize? Ripple. Ripple is an investor in the very company that powers BlackRock's tokenization infrastructure. Let me say that again, because I need you to really hear this. The company that created XRP invested in the company that runs BlackRock's tokenized asset platform, and both are now connected through the same interoperability protocol. That is not a rumor, that is a pipeline. Drop a comment right now and tell me how much XRP are you currently holding? Because if you understand what I just explained, you know why this matters. And I want to hear from you. Are you accumulating more right now? Or are you waiting? Now let me tell you about the development that happened literally this week that almost nobody is covering. On February 6, 2026, the CFTC issued an updated no-action letter that expanded the rules for stablecoins. This modification now permits national trust banks to issue dollar-peg payment stablecoins that are eligible as margin collateral in regulated derivatives markets. Why does this matter? Because Ripple's RLUSD stablecoin meets those exact criteria. RLUSD has already hit $1.5 billion in assets under management. It is now the third largest US regulated stablecoin. And here is the kicker. Ripple has applied for a national trust bank charter from the OCC. If approved, Ripple would be able to issue RLUSD directly under federal supervision. That means RLUSD could be used as collateral in futures and options markets worth trillions of dollars. And every single RLUSD transaction on the XRP ledger burns XRP as a network fee. That is a direct deflationary mechanism linking stablecoin growth to decreasing XRP supply. The more RLUSD gets used, the more XRP gets burned. This is not financial advice, but that is a fundamental supply and demand dynamic that most people are completely ignoring. And then there is the Clarity Act. Treasury Secretary Scott Bessent went on Fox News just this past Sunday and said the United States needs to pass the Clarity Act this spring. His exact words were, "It is impossible to proceed without it." The Senate Agriculture Committee already advanced their portion of the bill in a 12-11 vote. The Banking Committee markup is expected any day now. If the Clarity Act passes, XRP could be officially classified as a digital commodity under CFTC jurisdiction. That means no more SEC lawsuits, no more legal uncertainty. Institutions that have been sitting on the sidelines waiting for regulatory clarity would have the green light to deploy capital into XRP. And here is where it all comes full circle, back to BlackRock. Multiple AI models and industry analysts have given a moderate to high probability that BlackRock will launch a spot XRP ETF later this year. Google's Gemini AI said the reason is simple: fear of missing out. The regulatory blockers that previously kept conservative giants like BlackRock on the sidelines have largely been removed. There are already 7 spot XRP ETFs trading in the United States, with combined assets under management of over $1 billion and cumulative inflows exceeding $1.23 billion. If BlackRock enters this space with their own XRP ETF, backed by their distribution network and their $14 trillion reputation, the floodgates open. That is not hopium. That is following the infrastructure trail that is already being laid. Hit that like button if you are connecting these dots with me right now. And share this video with one other XRP holder who needs to understand what is actually happening. Now let me address the elephant in the room, because I know some of you are thinking it. Mo, XRP is down over 60% from its all-time high. The price is getting crushed. Why should I care about infrastructure plays when my portfolio is bleeding? And that is a fair question. Here is my honest answer. The price action right now is brutal. The entire crypto market has lost 47% of its value from last year's peak. XRP is caught in that sell-off along with everything else, but here is what I keep coming back to. During the worst week for crypto this year, institutional money was flowing into XRP while it was flowing out of Bitcoin and Ethereum. Wallets holding over 1 billion XRP have been steadily accumulating since January. Their holdings increased from 23.35 billion to 23.49 billion XRP. Whales are buying this dip aggressively. And Ripple just announced that tomorrow, February 11th and 12th, is XRP Community Day 2026. Brad Garlinghouse is opening with a presentation called The Era of XRP in Capital Markets. They are expected to unveil their full 2026 adoption roadmap, including smart contracts, zero-knowledge proofs for privacy, and institutional DeFi integrations. The timing of all of this is not random. You have BlackRock building tokenization infrastructure that connects to the XRP ledger. You have the CFTC expanding stablecoin rules that directly benefit Ripple's RLUSD. You have the Clarity Act on the verge of passing. You have 7 XRP ETFs already live with over $1 billion in assets. And you have the CEO of Ripple about to lay out the roadmap for capital markets adoption. Standard Chartered has estimated that XRP could be worth over $8 by the end of 2026. That is not my prediction. That is a major global bank putting their reputation on the line. So let me ask you this. Do you think BlackRock is better for XRP, or is this all just smoke? Comment your answer below because I genuinely want to hear both sides of this argument. Look, I am not a financial advisor and this is not financial advice, but what I can tell you is that I have never seen this level of institutional infrastructure being built around a single crypto asset while the price is this low. The people who understand what is being constructed right now are the ones who will look back on this moment and either be grateful they paid attention or regret that they didn't. The smart money is not watching the daily candles. They are watching the pipeline. And that pipeline leads directly through BlackRock, through Ripple, through RLUSD, and through the XRP ledger. If you found value in this breakdown, subscribe for daily XRP analysis because I am covering every single development as it happens. I will see you in the next one.